What up, guys? We're eventually checking in. Nice to meet you. And today we're going to talk about 5 factors affecting your credit score, guys. A lot of you guys have a subpar credit score, and it could be great if you just understood why your credit score is what it is. So we're going to break it down for you, the 5 factors affecting your credit score, and break it down for you the most elementary way so you can understand it and you can improve upon it. How does that sound? We got you. According to this article from Business Insider, the average millennial has a credit score of 686. Gen Z is slightly low at 679. Now, not the worst, not the best, but this credit score is still going to prevent you from getting the best loans, the best rates, the best apartment living, things of that nature, guys. So we're going to let you guys know the 5 factors affecting it so you can improve upon it as quick as possible. We're going to give you guys a quick overview on how your credit score is actually accumulated, okay? We're going to start from the top and bring it down. 35% of that is payment history, 30% of that is debt utilization. And then you have 15% of that is credit length. So how long you had the credit card. And to round it out, 10% of that is credit mix, and another 10% is new credit. So that accumulates the full 100% of how your credit score is accumulated. So now we're going to get into the depth of the intricacies of how it actually works.
All right, getting started here, we have credit mix. Now this makes up about 10% of your credit score. You should not be so worried about this. This is made up of your home loan, your credit cards, maybe an auto loan, personal loan payments, student loan debt, and things like that. This is only 10% of your credit. Make sure that you're utilizing credit in a good way or an exceptionally great way to get yourself extra points in terms of credit cards, or to maybe start a home remodel or things like that. Don't use your credit cards to just be buying outrageous and lavish things, because that is going to bring your score down and make your credit card mix, or credit mix look kind of down. So make sure you're paying attention to that.
Another 10%, guys, is new credit, guys. You really have to be careful with this one, because opening too many credit cards at once can raise a lot of red flags with your credit card, right, guys? So keep it to a minimum. Maybe open 1 to 2 credit cards a year. Don't go crazy, because it is 10% of your factor when it comes up to your score, guys. So 10% new credit. Be careful of it. Be mindful of it. We'll go more in depth as we get into the other factors as well. So stay tuned.
All right, moving right along, we have your credit length history. Now this only makes up about 15%, but it is crucial. This is something that they judge to allow you to get loans and mortgages and things like that. So it can take upwards of 7 to even 10 years to establish a good credit history and things like that. So make sure that you don't have late payments and missed payments and things like that, because that is very detrimental to your credit. So you want to make sure your history is in good standing throughout the length of your credit usage.
All right, guys, please pay attention. This one is very important. At 30%, we have your amount of credit to debt utilization, guys. Essentially, how much you owe on your credit card, how much credit you're using. So for example, guys, let's say you have 10K spread across 2 credit cards. You don't want to go over spending $3,000, because anything over that will put you over the 30%, guys. You don't want to go over that ratio. So here's a hypothetical scenario for you guys. Let's say you're actually at that 5K mark, right? You got 10K, right? You're supposed to be at 3, but now you spent 5K. You could potentially open up another credit card, but like we talked about new credit before, that could potentially raise a red flag. So with all that being said, guys, stay within your utilization rate and do not go over that rate. Matter of fact, don't even carry credit card debt. We talked about that a lot on this channel, guys. Remember that.
Lastly, and one of the most important things to know about credit is your payment history. Your payment history makes about 35% of your overall credit score. Now, one late payment is not the end of the world, but missed payments are very detrimental to your credit and will hurt your credit score for a long period of time, and it takes a long time for that to come off. I mean, it's upwards of 7 years or something like that for a late, or for a bunch of late payments, but also a missed payment to come off of your credit score. If you miss a mortgage payment, that is even way more detrimental, because then you are kind of excused from even getting a mortgage at that point up until a year or 2 years, until they consider you in good standing enough to make payments on time. So you have to make sure that you're making on-time payments. Set up auto pay. Make sure you're not forgetting to make these payments, because that is something you definitely can control, and you definitely don't need bad credit.
With all that being said, guys, now you have the knowledge of what factors affect your credit card. Use it to your advantage to get your credit score up at least to the 700, 750. You're really in there. So let's try it. Let's give it a shot. Live adventurously. World is yours. Like, comment, subscribe below.